Welcome to ThinkAg's AgClinic. As you know, ThinkAg is a collaborative platform. It's a not-for-profit platform where we aim to bring together people from across the food and agri value chain, financial services, warehousing, technology, input supplies, outputs, to actually discuss and find solutions to some of the pressing challenges that are impacting technology absorption in the food and agri value chain. So the focus is building collaborations to support technology absorption. It's a 2-year-old platform, and we are privileged to have several of you as our members, and we look forward to many of you joining on board. AgClinic is one of the initiatives of ThinkAg where we partner with industry experts, practitioners, and in this case it's Dwara Trust, to actually go deeper into an aspect of the food and agri ecosystem, to have more nuanced conversations, to sharpen the problem definition with the hope of building collaboration. So what we have today is part 1 of a 3-part AgClinic, which is co-hosted by Dwara Trust. And I'm now going to hand it over to Samir, who's the vice chair of the trust and the group president, to take it from here and introduce the topic and the panelists. Just from a hygiene perspective, request all of you to please post your questions in the Q&A box. We will aim to select from them, and towards the end of the conversation, bring those up, and Samir then will lead them with the panelists for answers. Thank you again for being here, and look forward to engaging afternoon session. Over to you, Samir.
Thank you, Raman. It's a pleasure to be moderating this conversation. It's an honor and a privilege to have who we have on the panel and our special guest, Mr. Mohanty sir. So I couldn't have asked for a better panel to put a spotlight on this topic, which is commodity exchanges of the future. And more specifically, we'll sort of look at how the whole commodity exchange ecosystem, and I use that term slightly more generically because I include warehousing, testing, assaying, the exchange trading infrastructure, and how do we sort of collaborate with the very fast growing and exciting agribusiness startup ecosystem, which has over the last 3 to 5 years grown quite significantly. So really a pleasure to do this. What I will do is, just before we commence the conversations, I will introduce our panelists first, and then hand over to my colleague Aparajita for a quick research brief on to set the context, so that we don't have to spend time understanding what the context is, and then we can sort of jump straight into the discussion. So I just share. So our special guest for today is Mr. Mohanty. He is, and really privileged and honored to have you, sir, with us. I can almost, having worked with you for the last, sort of under your guidance and supervision for the last maybe sort of 5-6 years, you've been the architect, I think, of the modern regulations for commodity exchanges in general. So, whenever we've come to you for any, conversation in a very nicely architected and curated manner, you've basically had a very, very ambitious and very forward-looking reform agenda for the commodity derivatives markets. And you've essentially given the exchange ecosystem and the traders and the participants really no excuse for having a vibrant marketplace. Right? Anything that has been asked for in the right judgment and with the right consultation, you have essentially knocked most of those items one by one, and really created the sort of the framework for for a vibrant ecosystem. And really, it's now up to the industry participants to deliver on the promise that has been made to you. So Mr. Mohanty is the whole-time member of SEBI, and has responsibilities for market regulations department and commodity derivatives market regulations department, which is amongst other responsibilities. So two of his main significant responsibilities. He chairs the high-powered committee on cybersecurity at SEBI, and previously been the executive director at SEBI. He served a member on various expert committees, and specifically one very path-breaking committee was the integration of spot markets and derivatives markets. He chaired another committee constituted by the Government of India on framing the warehousing norms for non-agricultural commodities. And it's been an absolute sort of honor to have seen him in action and his vision translated into action. And we look forward to your sort of context setting and keynote address as we commence the conversation. Delighted to have Vijay, you on the panel. Clearly, right with your hands on the steering wheel as the MD and CEO of India's largest agricultural commodities exchange. Really sort of pleased to have you. Vijay's career has spanned roles across the length and breadth of anything to do with agriculture and commodities, right from merchandising, international trade, logistics, risk management, food and agri businesses in India, and in the US and Canada. So really a vast amount of experience in two different avatars at NCDX, one running a business and now as the MD and CEO of NCDX. Vijay is a BTech from IIT Madras and an MBA from FMS Delhi. Sanjay Kaul is the chairman of NCML. Again, Sanjay has been, just no different from all the panelists and the participants we have today. An absolute visionary in the food and agri business. Sanjay straddles the public sector as well as the private sector. His last assignment before he took voluntary retirement from the Government of India was Joint Secretary Food Policy, Government of India. And then he subsequently went on to found and start NCML, which was India's first warehousing, collateral management, grading, assaying company. I've had the pleasure of working alongside him in different capacity. He was also with a division of NCDX, which was NICR a few years back. And in his sort of under his leadership, he has built probably the best sort of infrastructure in the country for warehousing, warehouse receipts, negotiable warehouse receipts, grading and assaying of highly sensitive commodities. More recently, a sort of financial services business, as well as a e-marketplace. And so, right from sort of the physical infrastructure to the digital infrastructure, from public policy to private sector, straddles several sort of assets of this industry. Sanjay is an MA in economics from Delhi School of Economics. Pleasure to introduce Jatin to you. Jatin, I would sort of call as probably the first Agtech in the country, although that may not do justice to describing Jatin's achievements and what his firm has done, or group of entities now that he has founded has done. But clearly, when Agtech as a term was not fashionable enough as it is now, didn't receive the kind of investments that it is receiving today. He founded SkyMet. And alongside SkyMet, a range of other services and companies, including Gram Cover, which is a digital insurance distribution business for rural India. And prior to his sort of foundership of SkyMet Weather Services, he was associated with TV Today, and prior to that, ANI Reuters. He has a degree in political science from Kirurimal College in Delhi, a master's in international relationships from Boston University. Really sort of very, very unique perspective. As you can see, and as you will see in the conversations going forward, we have really sort of both breadth as well as depth on this topic, and really looking forward to the conversations. Last but not least, an absolute privilege to introduce Chetna to you. Chetna has been a grassroots visionary and leader for several years, and really sort of championing the cause of the financially, and not just financially, I would say socially excluded communities in India. She's founded the Mandeshi Foundation in a place called Maswad in Maharashtra, rural Maharashtra. She's been on several national boards, including the Niti Ayog's Women Entrepreneurship Cell since 2018, the Advisory Committee on India's Financial Inclusion Strategy with the Reserve Bank of India. She's been the co-chair of the World Economic Forum at Davos in 2018, and co-chair of the Financial Inclusion section of the W20 Summit 2018 in Argentina. So she's a farmer herself, amongst various other facets of life that she represents. So I think she will bring, phenomenal perspectives from exclusion, both financial as well as social, to challenges of farmers, being a farmer herself, and not just being a farmer herself, but really working very closely with the rural communities over the last many years. So this is our panel. Really couldn't have asked for a more I'd say visionary panel to have amongst us, and to shed light on this conversation. I will come back and speak a bit more about the topic in a few minutes. But before that, I'd like to introduce my colleague Aparajita to you. She's a product manager and a researcher by sort of training. She works in one of Dwara's newer initiatives, which is an Agtech initiative. And Aparajita, having a research background herself, is going to sort of, for the about 7 to 8 minutes, just basically set the context in terms of the regulatory landscape and the policy landscape, and a bit about the sort of the Agtech landscape that we see in India, just so that it sets the framework for the conversations going forward. So over to you, Aparajita.
Thanks, Samir. So I'll just get my presentation started here, and just jumping right in, I'll do a quick recap of the recent changes in the regulatory landscape with respect to agriculture. And I'll be speaking about how agri-markets work, what are the transaction costs involved, and what government efforts have spanned across the past 2 decades, which have brought us to where we are today. So I'm going to start with just a snapshot of agri-markets, an introduction, context setting, then an overview of the landscape judgments, the landscape ordinances that we have in place, why we should care about this, why this is relevant, the role of commodity exchanges and post-harvest marketing by FPOs, what is the landscape of the current Agtech players in post-harvest marketing and regulatory enablers of the same. And I'm going to end by just kind of looking at what is the role of Agtech in commodity exchanges and international best practices. So this is a very basic diagram of the downstream markets or forward linkages that we have in a normal transaction, which starts from your small and marginal producers and ends with your mills, end users, or exports. So as you can see here, anybody who's familiar with the agricultural market, that you have various ways of reaching the end user here, or the consumer, which you can see by the different arrows, right? A majority of the agri-marketing in India is through traditional spot markets, and these are predominantly unorganized markets with limited infrastructure, which can't cater to the rising demand that we have, as well as the quality of the demand that we have. Because as we know that for commercialization, along with the factor linkages to factor markets or agri-input markets, the link to agricultural output markets is equally essential. So in India, we basically have 3 agricultural marketing channels, which is basically state trading, cooperative marketing, and private trade. State trading, usually you have players like FCI, NAFED, or your trade groups of coffee, rubber, and the sort. Cooperative marketing, we usually see with commodities where there is high asset fixity, such as milk, or in perishables, you would have fruits like bananas or grapes. And then finally, our private trading, which is where our mandis or the APMC markets come into play. With respect to what are transaction costs? So we constantly hear about transaction costs and that we need to reduce transaction costs, and this whole slew of measures which have been introduced to reduce these transaction costs. So the various costs, as you can see through this diagram, of carrying out marketing at price discovery, to transportation, to searching for buyers and selling, these are considered as market transaction costs. And these transaction costs are further be broken down based on household, farm, location, or crop specific. Even social categorizations at a household level, such as caste and gender, can play a very pivotal role in who is included and excluded from access to land, credit, and markets, which is a very, very essential for ensuring the best price and market linkage. Over the past years, we see that the government has taken several steps, such as change in marketing laws, warehousing facilities, strengthening commodity futures, and setting up the ENAM, right? But still, that we see that the post-harvest losses in India is around 93,000 crore per year, which is actually enough to feed 2.5 crore people. So the question is of why we care: can these losses be avoided with the help of commodity exchanges of the future? And commodity exchanges aren't something that's new in India. They were set up in as early as 1875 in Bombay. So a quick snapshot of the agri-market here, that we see that when we talk about markets, that rough estimates tell us that for every 20,000 farmers, if we go by just the mandi system, we have at most one mandi. And even after the existence of ENAM, we see that not a lot of trading has taken place through FPOs. And the average share of FPO trade in total agricultural futures trade is as low as 0.004% as of May 2018. And even this activity is kind of concentrated in a few selected states. Now, this mega table here does nothing but the recent revolutionary changes that we've had in the regulatory landscape. To easing of trade barriers, to relaxing the ECA, to getting FPOs, where the constant push on aggregation, and the FPO operational guidelines just came out, and a constant complaint that we have is on the lack of structured programs to skill your FPO's managerial resources. And we see that all of these sectors are very, all of these demands that we've been advocating for over the past 2 decades have really, really nicely been met through these 3 ordinances, the Agri-Infrastructure Fund, as well as the FPO operational guidelines. So coming to why should we care, right? So as we know that market linkage is very important for small farmers because it would help them make them less vulnerable to price risk and enable them to sell their produce at higher prices. As we know that farmers have very low holding capacity. They have an immediate liquidity crunch, and that liquidity crunch necessitates that they get rid of the produce as soon as possible and get money in hand. But market linkages would really help for them meet that liquidity crunch, while at the same time ensuring that they get better prices. Then greater investment in agricultural ecosystem. While we have a lot of government money coming towards government investment coming towards the agricultural sector, that's not as sustainable as the players who are involved in the market themselves investing. Then a mechanism for aggregation and financing, a constant woe that we have of the agricultural sector in India. Taking a second longer on hedging price and distribution of risk, right? So in agriculture, we have 2 main risks. We have production risk and we have price risk. For production risk, we have a fairly developed crop insurance scenario in India right now, but when we can't see the same happening for futures and commodity exchanges, which is an essential part of agriculture and the risks that a farmer faces. Last of all is on ensuring food security via commodity markets. I mean, we've all seen how painful it is that when we hear of grains being destroyed, food grains being destroyed for the lack of a better price in spot markets, when alternatives in the futures market haven't been explored. So ensuring food security via commodity markets is another very important aspect of this. On commodity exchanges and post-harvest marketing by FPOs, because we see that FPOs are going to be pivotal to every conversation that we're having in agriculture these days. So what do exactly, how can FPOs contribute in commodity exchanges, participate in commodity exchanges and contribute to post-harvest marketing? So one of the biggest things that FPOs can drive in is sowing decisions. As we know that a lot of our sowing decisions are driven by past prices. Prices from the previous years, but commodity exchanges will really help farmers on looking forward on cropping patterns. Then access to markets, helping preventing distress selling and also giving them access to an alternate source of finance or in the form of warehouse financing through warehouse receipts. Apart from that, on market intelligence, where again you get a platform to compare prices and pick the best price that is available between spot and future. So right now, I'm just going to kind of come into the landscape of Agtech in post-harvest marketing, and the regulatory enablers that we have in the form of these 5 big announcements that we have. So over the last 5 years, B2B agri-marketplaces, farmer-to-consumer brands, farmer platforms have started receiving a bigger chunk of funding. It's really great that how we've built really great backward linkages or linkages to your factor markets, but we haven't seen the same happen in terms of forward linkages or linkages with B2B agri-marketplaces, right? And there is an increasing and a very necessary shift from farming to maximize yield to farming to maximize profit. This segment of Agtech players includes logistics and analytics that can be applied at the point of harvest from farm gate to buyer processor. Who has most to gain through this shift in the regulatory landscape that we see today is, of course, the players which are actively interacting with, working with FPOs, are working in storage, are working in warehousing, and working in procurement, because all of these are enablers for forward market linkages. And this is how we see the role of Agtech in commodity exchanges as well, right? Because one of the biggest issues that we see when, let's say, produce reaches a delivery center is issues with standardization. And this is something that Agtech can really assist FPOs in, that ensuring and monitoring that production quality and standards as per exchange are maintained from sowing to harvest. Again, financing and market intelligence. Again, when we spoke about a liquidity crunch, right? So an FPO will procure from its farmers, right? And the farmer needs to be paid about 75 to 80% of the produce's price at the time of procurement, which can only be ensured through working capital requirements, right? So these working capital requirements, though we have some players like Samanati, we have Lab Kisan, which are venturing in this field, but working capital requirements of an FPO are an immediate need, and Agtech can really intervene here, and there is a great scope for contribution here. Then transportation, assisting trading on future platforms. Again, a very important point, since as we see with that brokers that help trade on these exchanges, usually there's a clear incentive mismatch here in terms of that these FPOs will mostly have a low volume trade. It won't be as frequent. And third of all, they'll require a lot of hand-holding. So we need to provide such incentives to brokers to make sure that the hand-holding that's required for these farmer aggregates, these FPOs, is provided. And just summing up with the international best practices that we have, and we can learn a lot from China here, where broad-based farmer training programs and information sharing is done to encourage future markets. But apart from that, just getting from just preaching to kind of action is where we see that states trade in future markets. So it would be really exciting to see somebody like an FCI or a NAFED, have joint partnerships with the exchange. And something that we see that is, again, really, really encouraging is the data sharing between government and private players. Well, private players have this last mile reach, and government has this huge database of knowledge which can really be leveraged by Agtech and private players to kind of for public good and contribute to agriculture. So this is all on my end, and I think I'll just hand it back over to Samir, and we'll discuss about what next. Thanks, Samir.
Thank you, Aparajita. So without further ado, let's jump straight into the conversation. We've had some excellent context from Raman, as well as research brief from Aparajita. So it's a pleasure and a privilege to invite Mr. Mohanty to share his initial thoughts on this topic, given the sort of the range of initiatives that he has championed and undertaken. So over to you, Mr. Mohanty, sir. We'd love to hear from you, and then we'll move to the other panelists. Sir, you're on mute.
Thank you, Samirji, and thank you all the panelists. In fact, the day I heard about this particular webinar on this subject of post-harvest, particularly with an emphasis on AgriClinic and Agri-Tech companies, it sounded very interesting to me. And I thought, why not join the panelists and speak something about the experience that I have so far had over the last 5 years in SEBI, and prior to that about a couple of years in the Forward Markets Commission, because I have almost seen the transition of the commodity derivative market in front of my own eyes, from almost having nothing to now having so many things, so that we can really dare to think a lot of things for going forward to achieve in this market. So as you know, in earlier days before commodity derivative market came to SEBI, the market was being regulated by FMC. Although there was absolutely no deficiency on the part of the exchanges. They evolved as beautiful electronic anonymous platforms from 2003 onwards, and having all the ingredients of world-class exchanges with a lot of good governance, all the systems in place. I think the old Act of Forward Contracts Regulation Act had its own limitations and deficiencies to provide adequate regulatory comfort and assurance to the market, insofar as the regulation of the intermediaries are concerned, or giving adequate risk management mechanism framework to the exchanges. So as a result, what I have seen those days, a lot of regulatory burden was weighed upon the exchanges. Exchanges were loaded with a lot of self-regulatory activities, so much so that sometimes if there's some small negligence, a small miss out on their part, it was leading to a lot of issues in one or two commodities. It's because FMC used to only give broad guidelines, but the way SEBI is regulating, and SEBI has been regulating and enforcing the market of equity currency market, it was not being regulated by FMC because of a lot of restrictions in the Act itself. And so now after the market came over to SEBI, the first and foremost things that the entire market demanded, as well as the regulator and the exchanges, everyone demanded that this market should be first brought on par with equity market. On par with equity market in sense that not in content wise, but at least on par with equity market in terms of the robustness of the regulation, robustness of risk management, the robustness of cyber security, business continuity plan, disaster management, and not in every respect, this commodity derivative market should command respect and command that kind of sense of confidence and inspire confidence and credibility in the minds of the participants. That was the first thing to be achieved. So as soon as the market came to the folds of SEBI, what we did exactly is, first thing, we implemented all those measures that were required for regulatory assurance of the market. So a very robust framework for risk management was implemented, where not only we imbibed the risk management that were being practiced earlier, but also we added all the possibilities that could have been thought about, taking IOSCO principles, taking our ground realities. And I think the worst case scenarios that can happen, taking historical data about of last 20 years, 15 years, whatever, so that nothing to be missed out. and we have ensured a very, very robust risk management framework. Then we also concentrated our attention on the shareholding pattern, governance pattern, committees formations, and also we also set our house on order as far as the disaster management and the cyber security aspect, which is business continuity plans. And we ensured that the exchanges function the way other equity exchanges used to function, in a very professional, dynamic manner, without any complaint from the market. And our exchanges, particularly, they had an additional burden to tackle with the ground realities of physical market. So far so good. We implemented everything as far as the management, governance, shareholding, risk management is concerned. And everybody understood that also. Very quickly, everybody understood that, yes, all these exchanges have come on par with other equity exchanges. And we had also, there was no exclusive clearing corporation. So we set up clearing corporations with same set of innovation principles, counterparty guarantee and risk management. Everything came on par within no time. I think within a couple of years, we are on par with all the exchanges. And I'm glad that Samirji and Vijayji, they are here. They have been the foot soldiers of these commodity derivative market, and foot soldiers as well as leaders. They have done quite a lot, and Vijay is continuing to do good work in this market. And of course, Sanjay ji, I also know him. I have met him a couple of times earlier. And he's been also a very great force in this market as far as physical part is concerned. I'm sure he must be having his own problems and challenges when it comes to deal with deposits and quality assaying. A lot of, I think that part I don't want to touch because so mind-boggling. And sometimes whenever I think about physical market part of the commodity world, really, I wonder how people are really working with so much of challenges. It's easy to deal with financial instruments like derivatives and regulate them, but above that superstructure, these base, that subsurface, which Sanjay ji and others who are dealing with the physical market are really very, very tough to deal with. And it's because of these efforts that people are making in the physical market, including warehouse service providers and others, assayers and all those value chain participants, we are able to deliver good work in derivative market as well. So after doing that, next is what? I mean, then the SEBI's other departments said, okay, you have come on par with equity market, everything fine. Now what is next? I said, next is that we cannot be on par with you people because our cash market is somewhere else. It is fragmented, unorganized. We don't know. It is here everywhere, still nowhere. I mean, we really don't know what's going on. Sometimes they say a lot of supply side is very strong. Sometimes they say supply side is vanished. Some people have cornered somewhere some goods. So this is so challenging. So your equity side, you are seeing both the things before your cash market and derivative market, F&O segment, both are in front of your eyes. But here I have only my derivative market in front of my eyes. I have no knowledge or no clue what's going on in physical market. But at the same time, I am supposed to integrate my derivative market with the spot market, about which I have no clue at all. I have to rely on so many estimates, so many opinions, counter opinions, and so many things experts talk about physical market. Sometimes some estimates come and we go ahead in one line and set out our position limits in accordance with some of the estimates. And suddenly I found after 4, 5 months, 6 months, our position limits either are very narrow or too broad, and it's not working out. And sometimes they say the crop is very bad, damaged, and this time your quality parameters have to be a little diluted. And we do that, then we find suddenly those quality, we compromise a little bit on the quality parameters, but there's no taker. People say, no, premium products are also available. So this kind of shifting stance and shifting opinions, shifting estimates, a lot of dynamism and a lot of, you don't know whom to believe, whom not to believe. That accuracy factor is still elusive to us. With the physical market is really, I'm sure even those who are working day and night in physical market of agricultural commodity market, still they will not be for sure to say, yes, I know this market. I understand this crop particularly. But suddenly the next day they think that it is so and so, and they have set in their mind some kind of a predictive opinion they have about the price or about the supply side or demand side. But suddenly they find some changes in government policy, a lot of importers coming, and their plan, everything that they have advised to their clients goes haywire. So also is our position. So we also constantly watch, observe, and try to interact and with the physical market, and the exchanges are eyes and ears, and sometimes we go beyond that also to understand the market. So on the basis of whatever understanding we had, like I said, in the FMC regime, we were behaving like little kind of deprived child, or when a lot of deprivation was there. So when I came to save you with the market, and I had to set up this department here, so as a deprived child would do, I wanted to fulfill all the wishes that I had that this market should have. So in a very childlike manner, I straightway slogged hard to get those products which Forward Contract Regulation Act had specifically prohibited. So somehow we went for option contracts, but option contract, again, there was some technical obstacles we faced, that we cannot have plain vanilla option in goods. So we went for option in futures. But then again, I had to overcome those regulatory or legislative obstacles. And now we have option in goods also in place, which I have been hearing since FMC days, that the moment option in goods comes, it will help the farmers. It is purely an insurance product. A farmer will buy put options and he'll rest in peace. After 3 months, simply he has to exercise his put option. That's what really we are at that particular point of time where we are trying to implement and experiment with this option in goods in a very, very serious manner, so that we'll try to reach out to the farmers, maybe not directly the farmers through the FPOs, because FPOs are going to be the largest and the biggest attractive collectives in coming days. And most of the FPOs are also getting converted into corporate model. So, and having professional managers at the helm of the affairs. So that is going to help us a lot. And our endeavor is to reach out to them and try to give them put options, so that they are not worried about the price fluctuation, and they simply get locked in a price, and then they rest in peace for a couple of months, so that they can sell their produce at the committed price, and to which they'll definitely build into their cost factor and also some element of profit. We have also now come out with these Agri-Dex, that is the indices on which futures and options are going to be traded, both for agri and non-agri. We offer that. It's a cash settled contracts. So those who don't wish to take exposure to physical commodity, they can also get exposure to cash settled commodity through this index, a basket of commodities being incorporated into that index. So it will also help those people who simply want to sit at a distance and take a market look of the entire commodity market and take a price view and simply play with it, and without having to deal with physical market and delivery and incur those delivery charges, etc., which are very, very high as far as I know. So these are the products we have given. And then what was happening all along, this market was completely dominated by traders this side and traders this side. Both hedgers side, sometimes they call themselves hedgers, and sometimes they call them as speculators. There was no distinction like in US and all. They classify as commercial and non-commercial. We had no clue to distinguish who's really the trader, who's really a speculator, who's really a hedger. So although NCDS has its own system of giving hedge quotes and all, I think not many takers are there to take those hedge quotes. People want to be on both sides, taking price risk as well as giving price risk. As a result of which, this market also sometimes earns the name that a lot of speculation activities going on, and those genuine hedgers also sometimes they show aversion towards this market. But now, what we have tried to do is we have tried to invite and attract as many hedgers physical marketplace are concerned. The exchanges have tried to reach out to the real players, the processors, the millers, and the producers, importers and exporters on the one side, and to give credible speculative side to those hedgers. We have also introduced institutional players. So far, we have allowed the mutual funds, PMS, category 3 AIFs, alternative investment funds, and also foreign entities who want to take exposure in physical commodities in India. They have also been enabled. I think to the best of my knowledge, in the mutual funds and PMS and AIFs have started showing a lot of interest. We have also given the mutual funds to go through custodians. Some custodians have also been permitted to give to do the work of the institutional players. Now I think a lot of 4 to 5 AIFs I'm seeing they're showing very keen interest in this market, in agricultural market. Although most of them go after gold, silver and all that, but there are so many serious players also, and hybrid mutual fund schemes have also been evolved who want to really deal in commodity, agricultural commodity market. So on the, I'm sure in the times to come, there'll be very good quality institutional participation on the one side who are willing to take price risk, and the real hedgers will be also there. Happily they'll be there on the one side, on the other side to give their price risk, and the volumes with these institutional players, the volumes, trade lot size, etc. is going to bound to increase, and I'm sure in coming couple of years there'll be a lot of increase in the market depth because of this enablement that we have given, which were not possible in the earlier regime under FMC. And as I said, these are the points on products and participants on which we have worked hard, and we have been able to give this to the market. So virtually I call these people that I have given 1.0 reforms to you. Now 2.0 is belonging to you. You people should come forward and start doing 2.0 reforms and do your part of it. All that you've been asking for, we have given. And then we have also, we didn't want to lag behind in the trend, in the effort, genuine effort that NCDX has been showing right from the days when Samirji was heading NCDX. He had created started a good base of FPOs to be attracted, and he had tried out experiment which is being continued by Vijay. And a lot of, I think more than 250 FPOs have been enlisted by NCDX, out of which I think 50 odd FPOs participated. And not only that, some of the FPOs are so happy, and they have come to us and shared their success stories. So we are also so encouraged. And what we did as SEBI, we sacrificed the regulatory fee and turnover fee that we used to charge the exchange on the agricultural derivatives, commodity derivatives. And we said, okay, this money you keep with you separately in a separate fund and use it for the benefit of the FPOs who are willing to be linked to this market. So, and accordingly, NCDS, what they have been doing, they are trying to subsidize the transport cost, assaying cost, and grading cost, and whatever manner the FPOs want, those FPOs who genuinely are interested to come to this market and try this market. So they are helping them. And in fact, the other day, I was taking a critical appraisal of NCDA. Why you are not spending this money? It's a very small amount that you have got. So the thing is that COVID also created some kind of negative impact. And I said, all those 250 FPOs, you convert them as traders. What they'll do, they'll trade once or twice during harvest time or little after that. And after really testing the benefit, they may get into a trading mode also. They can buy some product and also trade, and you help them out in any manner. So we are willing to help them to whatever extent we can. Although SEBI is not interested with the task of developing the physical market, but this small amount of money, if we can subsidize to reduce their cost of transaction, nothing like it. And I think Vijay will also share during his panel discussion some kind of experimentation we are going to do with put options involving some FPOs, so that we have to demonstrate to the world first before taking and calling the government agencies, procurement agencies, NAFED, HAFED and all, come and start writing options here, and instead of doing MSP, you sell put options and through the FPOs and all that, and try to waive the premium on the put options. We have to demonstrate first. So that is what I believe. So then we also agreed now recently, and he's so encouraged, Vijay also very encouraged to demonstrate to the world, yes, all that we have been talking about, how the farmers can be benefited by put options. So that we're going to demonstrate in a pilot manner. If that really succeeds, nothing like that, there'll be no looking back. So I'm sure it is going to succeed. because again, those sacrificed regulatory fee we can use to the extent of subsidizing the premium, at least for a pilot project, so that government takes note of it and does its own bit when it comes to replicating it throughout the country. So this is one of the wish that we are going to fulfill ourselves in near future. And we have always a lot of targets to be achieved. And for the time being, of course, we want FPOs to be given a limited kind of brokership membership, because the FPOs, one point of cost of transaction is that they have to come through a broker. So why should they again pay brokerage and all that? So some kind of regulatory amendment has to be done. That also we are trying to do, so that the FPOs, because they'll be trading hardly 4 or 5 times in a year, depending on the multi-crop or single crop or whatever crop they are dealing with, the constituents of the FPOs. So we'll give them a limited membership so that they'll be directly coming to the exchange platform and trade it. And we'll also make their KYC now very, very easy, so that FPOs KYC supported by a ledger of list of farmers will be enough for the KYC of the farmer itself. So that kind of thought process is going on. And of course, we should, yeah, one thing also I'm trying to do, because I'm wearing double hat these days. I'm also director of the National Institute of Security Market these days as additional charge. So what I'm going to introduce a course on, I'll of course definitely call on Sanjay Kaul ji to take his advice. We are designing a course on logistics, assaying and warehousing, physical part of the market, and how it can be and linked with the derivative market, regulatory aspects, so that we'll try to train some students and they can be capable of being fit material for employment in warehousing sector or exchanges, or even as manager of FPOs also. Some kind of a short duration course I'm thinking. We are the broad contours of the program I have drawn up. So I'll definitely take advice of the people who are in the physical mart and try to launch it. And of course, we are going to simplify and consolidate the warehousing norms for both agriculture and non-agriculture, so that there need not be 2 warehouses for 2 segments. One warehouse also can have, on one side of the warehouse, they can have aluminum and copper, other side they can have wheat, sugar, why not? So this kind of thing that is also in our mind, I'm going to do in coming future. Product wise, a lot of things running through our mind, like freight derivatives, commodity ETFs, and index on spot prices of commodities, seller specific contracts, weather derivatives, some of these items that right now we are contemplating. And participant wise also, some of the participants, there is a talk going on, why not WSPs be allowed to participate? Their conflict issue is there. WDRA has a huge issue with respect to conflict of interest, but we are trying to examine if WSP, because they know the market also. People come there to deposit goods. They are directly in touch with the people in the nearby neighboring area where they cater to. So they can be really a very good aggregator if they sincerely try to do and trade in the market. Banks and insurance companies a little longer term, because there we have to involve IRDA, RBI and all. And of course, Aparajita has given a beautiful presentation where she has talked about Chinese model also. I'd been to China, thankfully, little before the onset of COVID in sometime October. And this insurance model I have seen, they have also experimented. It's not a very rampant, the very, very widely applied project there. There the insurance companies are taking these risks basically, and they're giving, and in turn, they're selling it to the trading member. Government is also subsidizing the insurance. So finally, our put option is also an insurance product, So there also this premium can be, subsidized. I think we can also achieve this desired result. In that, rather will be achieving a better result in the sense the farmers will be more trading. They'll get used to trading on a derivative exchange gradually, and they're learning, and the learning curve will be far better than what the Chinese people are doing. And apart from the regular training about the quality, assaying, grading and all that, and the trading in derivative market itself, if one day will come, they'll know everything. So if they have a professional manager, he'll really take care of everything. So that day the farmers will really, we don't have to teach them much. Rather, they'll come forward suo moto and start participating. Coming to this agri-tech part, this we have, I think, many people may or may not know, SEBI has also launched regulatory sandbox and innovative sandbox models. The innovative sandbox model, which is already been, there's a circular. If people are interested, they can refer to May 20th circular, where we have allowed, if any startup has any idea pertaining to this market, suppose they want to use NCDX or MCX data or whatever data they want to do, take historical data, they can experiment their product with that. We call it innovative sandbox, and commodity products, related products also, derivative related products also can be tried out. And similarly, regulatory sandbox also, it permits the startup entrepreneurs to try out their ideas in live environment. With limited kind of intermediary license that we are giving them for doing this, with the consent of the subject participants, they can do it. So they can refer to these circulars. And I know agri-tech space has really evolved very well over the last few years, and they are doing great work. Someone told me not less than 450 agri-tech startups right now they are working in India and are growing at a rate of 25% every year. And there is a very clear recovery in the agri sector as farmers are being more open to adopting new age technologies. And they have started and teaching, and people have learned smart farming model using a high level of artificial intelligence and IoT in agriculture. And they have taught also people precision based sowing techniques, AI-based, artificial intelligence-based apps for predicting weather conditions and all. Now in post-harvest marketing area also, startups are doing very good work in online marketplace, and they are offering robust end-to-end supply chain management, etc. And fintech platforms for farmers are definitely grow by leaps and bounds in coming years. So farming as a service is also a concept wherein startups offer farming services and machinery rentals to farmers on a pay for use basis. So a lot of startups are tackling this post-harvest, pre-harvest, sowing part of the agriculture in a bits and pieces manner. I think the day will come, there will be a startup integrating the entire thing also. And post-harvest startups are definitely bound to do well now in the light of the ordinances that the government of India has brought, where the farmers have been liberated from the clutches of the APMC market and all the adatiyas. So now only thing, somebody has to go and trigger it. They have to teach them, the farmers, that yes, from your farm gate itself, we can take your produce. So do this, do that, and all that. They have to guide them. And I'm sure the new millennials, they're having brilliant ideas, and they'll come out with good startup ideas. And SEBI, from SEBI side, I can always say that we'll be definitely willing to help those people, whoever wants to work in the commodity derivative space, because this commodity derivative market is nothing but an extension of the primary and secondary market. The only difference is primary, secondary market, they think about today and look at today and trade today. And the derivative market, you have to trade today, look at future. So that futuristic perspective that we give, that can happen if the contracts are very, very liquid and the demand supply side trades pour in as many as possible, so that the real price formation happens. And it gives a very good indicator of futures price for everybody to follow and get benefited out of it. So with this, I think I have taken, I might have exceeded my time also, Samirji, I'm sorry. In that case, I have nothing more to add. I'm leaving it to the panelists to take it forward. Thanks a lot if I have exceeded the time. Thanks.
Fantastic, sir. This was a masterclass in regulation making, as well as sort of sweeping overview on the developing AgTech industry, and also your, your sort of your encouragement for using the regulatory sandbox that SEBI has in place. So we'll come to all of that. So really fantastic. Really enjoyed this opening sort of context from your side. I'll jump straight into the panelists. And I know we have little time, so I may be modifying and improvising as we go along this conversation. So what I'm going to do is just ask each one of you, if it's okay with you, about looking at the topic, which is that this is commodity exchange of the future in the context of massive amount of regulation change that has happened from SEBI, Government of India through the ordinances, a very vibrantly developing AgTech ecosystem. You put all of that together, and I could also see Goel Saab's question, and Goel Saab will come to your question towards the end. But how do you see this in an integrated fashion? So let me start by throwing that question at Vijay and say, Vijay, how do you see this all coming together, and what kind of a role can exchanges play in your view as a fulcrum of this innovation? So over the next 2-3 years, what kind of tangible opportunities do you think that are possible to sort of conceive of in partnership between exchanges, regulatory sandbox, and AgTech startups?
Yeah, hi. Thanks. It's first of all been a remarkable sort of getting together of minds to set what is required in this ecosystem to take advantage of the liberalized regulatory environment. And I think in some senses, it has taken too long to get to where we should have been because agri-business, the way it's conducted in terms of both the scale and size that India has, we should have been where we need to much faster. But I think sometimes, as they say, you need the stars all aligned to make that transformation, and I think we are there currently. So the first thing that I'd like to maybe highlight is the need for culture. Someone said the issue with agriculture is not on the agri part; it's on the culture part, and I think the aspect there is one to do with habit, and the tools that are available need to be used. So it's almost like saying if you have brilliant roads and you have traffic lights and you have lanes, and it behooves the users to follow lanes, use indicators, stop and then start. Otherwise you will have massive accidents even on very sophisticated highways. So I think that point of habit, unfortunately in India, commodity firms have not really adopted these sensible habits in order to run their businesses. So the case in point is the industry, and I've been in the oilseeds industry both at a local and at an international level. There is a spate of bankruptcies which have cost the company money, and the largest players in, for example, the oilseeds industry have been gone bankrupt. The most recent has been through NCLT and is revived. And this has cost huge losses, not only to the company, but to the banks that funded this company. And so this is the unfortunate thing that first needs to be rectified. If you have highways and if you have lights, then the banks who are financing it or the NBFCs who are financing these companies ought to realize that you don't grow big in this business by taking a speculative approach to running these businesses. That the largest in the world that run these businesses globally remain in business for 150 years because they are hedging every exposure that they have. And I think if financiers in the country, whether banks or NBFCs, continue this practice of lending money in the physical world without demanding risk management as a necessary aspect of that funding, in fact, incentivizing it by reducing interest rates to those that do, I think that change in culture. And I think RBI has definitely put out circulars that have issued a guidance to banks. Unfortunately, that hasn't translated into action. I think, and the result of that is that the government has had to take forcible action to say, okay, we don't need 20 banks, we now only have 10. And I think the hit to the banks in terms of NPAs will continue unless this habit changes. So the competitive race to fund money or to lend money to commodity institutions, and this could be agri, this could be non-agri, if that is done indiscriminately, assuming that if you buy today, it will go up and therefore you'll make more money, that is a recipe for disaster. And I think that needs to be corrected ASAP. The reason for that is that the volumes or the open interest on exchanges is not a function of opportunistic trading. It's a function of I'm running a business in soybean or maize or wheat or steel or any of these commodity-led businesses where the price risk is that I could lose 20% and my margin is 1%. Those businesses have to be run as hedging as a habit. I think that essential change in culture needs to take place. And I think, like I said, I think it's good that we have finance as a key driver here and NBFCs as the touch points, because banks have not been able to touch farmers as much as NBFCs have. And I saw the name of Samunati coming in. So whether it's the NBFCs that can lend and incentivize this culture, I think that'll make a big difference. So I'll leave it at that for now.
I think that culture aspect was very, very powerfully made. So we'll come back to that, because I do see some changes and some trends that may catalyze some of that. But let me move over to Sanjay. And Sanjay, what do you think, having heard, experienced, straddled between these various worlds that I talked about earlier, what do you think are like the biggest opportunities for collaboration between the new players and market infrastructure institutions like exchanges? And again, to my point, I'm using exchanges in a slightly general way. I include warehousing, warehouse receipts, and the whole sort of supporting infrastructure in that. So what do you think are the big sort of opportunities that one should take advantage of?
So thank you, Samir, and thank you, Raman, for putting this seminar together. And thank you, Mr. Mohanty, for giving this broad landscape. So I think the way I look at this market in the context of these ordinances and in the context of the announcement of the fund is not so much as what will happen tomorrow. In fact, the more candid assessment is that the landscape may not change fundamentally. But I think what is important is to recognize, and you saw the way Mr. Mohanty spoke. This is very different from the way civil servants would speak 20 years back. And I belong to that generation. Because you see, I think there's a recognition of government of intent. Now, they may not always get the right recipes in the short term, but I am hopeful that they'll get it right. For instance, I have my own views about the way that the 1 lakh infrastructure fund could have been designed and funded. For instance, my interaction with the FPOs is that they're not really looking at high-level infrastructure as a first point of entry into the agri landscape, more the needs of working capital. How can they standardize and scale up? In fact, one area where I think the Agtech and all of us should collaborate is to get into what Aparajita also talked about, standardization and scaling. If an FPO is to, for instance, get into a thing, even a simple thing of putting 100 tons into a container of pulses, and more ambitiously at some point, a maize ship of 20,000 tons, you require 1,000 FPOs to come together. So either the FPOs have to scale up, and SFAC I've had dialogues with, and they had in fact prepared a fairly ambitious plan of raising the equity capacity or constraints of FPOs. Because currently the Agriculture Infra Fund can support a 2 lakh size of investment. Now, if you really want to talk about FPOs becoming aggregators to replace large commission agents, you have to allow them that space to grow. And maybe the platform that Raman has put together can get FPOs to collaborate with each other so that there's a demand side of say 1,000 tons, 100 FPOs can come together in one platform. I don't know, but I am hoping that in the next 2-3 years, we'll see this kind of collaboration between market players and policymakers. And one area where I think each of us have to do a lot, and I've been telling Vijay that when we started off when I was first part of NCDEX, the interaction that we used to have with government on on their understanding of the derivatives market was much more intense. And one area where I think we need to do a lot of work is we had a workshop with Niti Aayog, and their understanding of, for instance, the possibility of using put options as an alternative path of risk management for farmers was very minimal. And if this is the policy think tank, you can imagine the kind of work that we need to do with the Agriculture Ministry, with the Food Ministry. You see, SEBI is now very much on board because they've understood this market. But the government and policymakers have to do the same thing. On the agri-tech innovation side, I really feel that there are opportunities. You look at ENAM, and I mentioned it when we had that huddle, that I don't think that a diverse country with diversity in the cropping patterns, commodities, can have one centralized player like a Google or something which will have recipes for deciding contracts and marketing platforms across commodities. So I do see, for instance, private innovation, say, trying to create a dedicated cotton market, trying to create a dedicated pulse market, which will again will be a larger scale. It'll be cross-sectoral across mandis, but it need not offer all commodities and all products. So like we have exchange of different products with different participants, I do envisage a time where innovation will cut across. And I think the context of this pandemic is wonderful because, you know, look at this webinar. We've got 250 participants across the country. Otherwise, they would have to physically come to one place in Bombay or Delhi. Now, all of us are connected. And acting is a great opportunity for connecting all of us together, collaborating. And the final word that I'd like to say at this stage is that like the regulator has been talking of a development role, which means that governments and regulators should not get lost in isolated instances of, say, a soya contract or a pulses contract going back. The larger picture of a vision for 3-4 years is what we should all be looking at, which is to create a modern system, and there all kinds of innovations should be available. So if you really want financial instruments like mutual funds and banks, they will never understand the physical market. So we need not have obsession that all our agri-commodity contracts need to be have compulsory deliveries. Because you created the physical space in the security market from replacing a physical paper by demat paper. Why cannot you do that in the space? Of course, the warehousing companies like I might lose out, but then there'll be many more gainers, and that will create liquidity. So I think the kind of innovation and reform that SEBI has been talking about, we need to push innovation in a much bigger fashion and look at ways that this kind of ideation through this kind of ag clinics and seminars can take us forward. So I'll stop at this point.
Great, Sanjay. Thanks very much for your reflection on this topic. I'm going to move to Jatin. And Jatin, I really would love for you to talk about, I mean, you've put a lot of this into action, right? This is vision in action. You've partnered, you've almost been the first use case for partnership between new age companies and exchanges. So if you can just talk, and I know from all our conversations earlier as well about your partnerships with large PSU banks, large public sector insurance companies around innovation. So if you can talk about how that sort of comes together, from your real experience, and what are those opportunities?
My story starts with data. I'm basically a data collector on a very base level. And I have built a business by collecting weather data and then agri data in terms of commodity data, production data, and at different geographical resolutions. And the business or my entrepreneurial arc has grown as a problem solver because I had the data. So the biggest problem even today, although over the last decade, decisions are being made on now a plethora of data, the reliability of data in agriculture is still, it's only getting better now. So we started out with weather. Now, there is a lot of visibility. There is a monsoon forecast. We know, we know at the high geographical resolutions, almost to a near a gram panchayat level. What is the precipitation? And as data has become more kind of has percolated, the decision making and the capacity of the government to take risks has increased. So, and in agriculture, fortunately or unfortunately, the government is the regulator, also the biggest player. Let us not, in terms of, I'll give you a simple example. You take, say, ICICI Bank, one of the larger private sector banks. What is their total agri lending portfolio in a good year? Probably 33,000 crores or so. What is SBI's lending portfolio in agriculture? 17 lakh crores. I mean, it is a no-brainer. That is about $250 billion of credit to agriculture. Just is a total pie out of which SBI has the largest chunk of it. And therefore, I think what is happening is the narrative is changing. So what was, say, a statist philosophy of delivering goods through a government architecture, now it seems that the regulator and the government is going to deliver these goods through people like us. I think this is where all the innovation, all the fruits, I think this is the right chemistry to solving a very difficult, almost a Malthusian nightmare. You're a country of over 1 billion people, limited amount of land, water, electricity. I mean, you and I are not exactly farmers, right? Because we know that it is not remunerative. And the only way to get out of it is this whole cycle is innovation. Innovation in instrumentation, innovation in data, innovation in lending, innovation in transaction, credit, quality. I think the innovations also have to start on the pure biology of it. Say genetically modified. Or I just heard that some today I was reading that BT brinjal has been given a go ahead for locally made varieties, and also CRISPR technology to come up with stuff that can withstand droughts or heavy rain. And then a lot of innovation is happening. There are exchanges. So there is BJAC, which has been funded, which is this big exchange. There's the NCDX, MCX. The whole FPO revolution. So going from a political entity like a cooperative to a company, I think is big. Although easier said and done. In India, these are the hardest battles to fight. So, we will all talk about Sahyadri in Nasik, but what about a dime a dozen FPOs in Jharkhand and Bihar that are struggling?
Yeah.
How do when a lot of our innovations are happening, people will talk about, say, similar geographies. So they'll talk about cotton, soybean belt in MP, everything is in Indore, then Western Maharashtra with Nasik, then Chile here. But the real tough ones are, trying to do something with West Bengal farmers. Bihar is still, beyond the maize story. There are gazillion farmers there on small plots doing paddy. Or the northeastern states. How do we come up with stuff and create values? I think exchanges and markets are, is where this is going to be done. And financial literacy, getting people to bank. Even today, we talk about 388 million people of geo connections. Most of these rural connections are being used for entertainment. How many people are actually doing commercial transactions through phones? Now that is still, I still find it's very difficult. I mean, Gram Cover is the insurance brokerage that I have, is an assisted model because the lack of literacy, the lack of trust. What is even insurance as a concept, apart from the LIC thing that is there, that you could do it with parametric or you could do it with cattle, it takes a lot of education and a lot of face time to do. So I think, I think the mix is absolutely correct. I think the balance is there. I think private capital is coming. There will be winners, but there will be lots of losers. India is a tough place. And in agriculture, if you get it wrong, you get swallowed in no time. And also, one of the things that technology does, and we need to be prepared for this, it has happened in communications. There will also be cornering, because if you are able to be the first mover in the digital space, so if you are acquiring or if you're lending or if you're doing insurance and you get in, you can get massive size pretty quickly. And before you know it, you are actually bending the rules. I mean, you are the problem as opposed to the problem. So it might not happen now, but you could have one player, for instance, who aggregates everything. And now what we're going to do. So that is a problem that will come later. That's a good problem to have. But rather than having multiple players, digital technologies tends to aggregate rather than democratize things.
Fantastic. I think from someone who's actually walked the talk over the last so many years, really breath of fresh air. Thanks, Jatin. I'm going to go to Chetna now, and Chetna, bring us to the ground. I mean, we've talked about regulatory changes, exchanges of the future, government ordinances, collaboration between AgTech, more capital coming in. You've worked with farmers more than, and as a farmer yourself, more than any one of us, right? How do you see this happening, and what needs to happen for this to change the game for the farmer?
Thanks, Samir. And I'm really thankful that, you have put together with AgClinic and all about this whole debate. Now, let me tell you that, when I was listening to Jatin about innovation, and I just felt that, myself, as you said, like, being a farmer, I would just like to say that I'm not a farmer by choice. And when I say that, what the reason is that, as Jatin mentioned, that the most difficult thing is farming, and that's why you get these records of bank. But let me share with you some experiences which I've learned from the farmers. One, when Mandeshi started bank, being myself a farmer and being with Sharad Joshi, and Goel Saib is here actually. Mr. Goel has posed some questions also, and we were discussing yesterday night about all those issues. That when we started bank, my first thing was that we are going to lend to farmers, right? Farmer women. We couldn't do it. Very simple, being a farmer and running a bank. And I had to give the instructions that we are not going to give a loan to farmers because the cash flows are not matching, right? And then you feel like it's a painful that you have to take this decision in spite of passion, in spite of innovation in the product, everything. Why? Because the whole system, whole processes, the whole banking system is such that it is for the salaried earner. So you just have to redesign everything if you want to finance the farmer. That is one. Second, we were not prepared for that. That is two. Third, the NPA norms for the banks and NPA norms for the agriculture lending. Of course, I'm not going into those details, but I'm just saying it's very difficult to cope up as a bank. And so we had to design a very different product. Loans for chickens, loan for buffaloes, loan for dairies, where women have a control on finance so that they will be able to repay. But having said that, we were not happy because we were actually not cracking the farmers. We were cracking the periphery economy of farmers, which were taken care by women. So chickens, buffaloes, dairy, yeah, but not crops, right? Because if you are going for the crops, the cash flows are very different and your product will not be able to match it. So then what to do? So then the one thing which we decided that yes, we will be lending to the people, those who are buying the farm produce. How do you do it? Design a cash credit product for them, right? Again, it is based on the crop and all, but you provide a cash credit so that farmers get money at a time when they sell the produce. Now, this must be sounding very different, right? I have no experience of stock exchange. I have no experience of NCDX. Samir, you know, we did with our women farmer producer company a very basic workshop. So when we did that, we realized that, okay, as a bank now, we can help those people who are buying the farm produce and at least give immediate payment to them. And on those conditions, we give a cash credit to give to the buyers who are buying from the village, from the farmers, so that farmers get the money at the time of harvest. When they go to market, they don't have to take their produce back and some temporary relief. Then we realized that this will not work. And so then we thought, okay, why don't we form a farmer producer company? And we started a farmer producer company owned by women. Now I'm glad that we have these 3 ordinance, Essential Commodity Act, and Parliament has passed. Great, welcome. Let's see that it will work for farmer. But the 2 things are very important. You know, when we started a farmer producer company and we decided that, okay, we will buy the produce, farmer producer company will get the support. But what we saw was that there were no warehousing facility, right? So then, okay, start the warehousing. We did that. Unless you do that, unless you cannot help post-harvest vulnerability. So then we did the warehousing facility. Now, once you have a warehousing facility, then the receipt financing come back, right? And there Mandeshi Bank could play the role of receipt financing, and we could give to that farmers. And before, I used to tell farmers that why don't you come to us? Why don't you do this? We will give you receipt financing. Why won't you park your products there? Farmers were not sure. Why? Because for them, and they said that we will give you the produce. You will ask me about the quality control. You will ask me about the lab test. You will ask me about the lab test report, and then you will give me money. Farmers do not have time for that. So they will look for ease. If I am not taking care of lab test and I'm saying that, okay, you bring that report and then I will buy the produce, farmers do not have time. They will sell it to the local mandis where they are not asking this question. It is a classic example why moneylenders, why people are going to moneylenders, why people are going to mandis, is that it's not the illiteracy, it's the ease of doing the business. And it's a classic example that I saw in this whole agriculture circle also. So the first thing I would say and request that ease of doing business, create a ease for me to market my product, create a ease for me. I don't have to go. Yesterday we were talking, Goel Sahib and myself, that if we tell farmers that, you know, you get a lab test report, they will say, okay, I don't have time. How would I manage the logistics? How would I bring that? So I would just say here that, you know, we can walk the talk. We did the warehouse. We have cold storage. We are providing this facility. But Mandeshi can just make a showcase, one model which can show that horizontally you will have to connect all the dots. Don't expect farmers to do it. If you really want to reduce the plight of farmers, if you really want farmers to get better prices, if we really want farmers to not to do the distress sell, you have to create these things. Laboratory test, logistics, warehousing, market, and then the receipt financing will come, right? Because unless you did, and farmers know logistics. It's not that they don't have idea. All farmers are marginal and small farmers. Sahyadris are very few, and they know how to bring their produce. They have been doing logistics for dairy, for everything. So it's not, they come together when they see the value in it. But unless you have to show them that they are not cheated, they are not put in a very hard, complex lives, because then it's very difficult for them to. So you have to start from where they are and find the solutions. I think that is very important. And I would just end with this, Sameer, is that, you know, we have a farmer producer company, women who are owned by women, and I'm proud that now not only that, but they are coming with soil testing. They're ready to pay for soil testing. Once they get the benefit, they are ready to pay. It's a matter of proving ourselves, not proving farmers. It is a matter of proving ourselves, whatever we have. Either it is a spot exchange, either it is a commodity exchange. If farmers are going to benefit, they will, when they are sweating so much in the field, why will not they invest in it? They will invest, but we have to prove ourselves. And here I would just end that we have run the warehouse, we are running the cold storage, and we have been able to do this successfully and with no government support. There's no government support, no outside support. So it's not that things cannot be viable, but yes, it will take a time to bring the scale. The scale can come if the big players like you all can come in, right? We can do collaborations. We have done. I mean, I was glad to see that today in Madhya Pradesh, soybean farmers have come together and what I read the news with Kamathan and Farmer Producer Company Association together and invested in futures of soybean. I think that is possible. But I do believe, and Jatin, I would just like to, extend it. Like, yes, innovation is very, very important, and all the startups are coming. That is passion, which is youngsters are coming. But it would be great to work with the farmers. And if we walk the talk, I think that farmers will get benefit, and they once they get benefit, they will be ready to invest in soil, invest in lab tests, invest in insurance. And I really like that slide which showed about how China has dealt with, these minimum insurance for prices. I think if things work out, those are the solutions which farmers look forward. And that I would end here.
Thank you, Chetna. I mean, amazing. I think the real insight there is to make sure that the responsibility is on us as industry to make sure that the services that we build, the products that we build are easy to use and are accessible to the farmers. We don't need to teach the farmer how to run his or her business. They know, they're very smart. They know exactly how to do it. But if we want them to get connected to the modern ecosystem, then the onus is on us to design product, services, and ease of doing business in a manner that makes it easy for them and doesn't end up excluding them. And I was really sort of very delighted to hear from Mr. Mohanty sir as well about sort of the lightweight model for giving FPOs sort of access to markets directly, because I remember this, sir, talking to you many times in the past as an idea. I'm delighted to see this coming through. So I just want to move towards a closure here in the context of time. And I want to sort of go back to a wonderful point that Mr. Mohanty made about the regulatory sandbox. And I want to end with that and get some comments from everyone on that. I think this would be great and really fantastic for SEBI to sort of offer that the existing regulatory sandbox can already be used for Agtech experimentation and pilots in a very controlled environment with with certain concessions on regulations, etc., until they become sort of permanent regulations. So I'd like to sort of put a spotlight on that and say and ask the panelists, in the context of a regulatory sandbox that is available, what might be the one or two sort of projects that you would prioritize to put through this sandbox? And we'll pick this up, given that this is a 3-part series. We'll pick these conversations up in the remaining 2 episodes and to flesh them out in detail, because we do want to make this series sort of a vision in action kind of a series. So what are the, sort of, if let's not even 2, 3, let's say if there is one for each of you, a pilot for a regulatory sandbox idea, what would that look like? And let's start with you, Vijay, if you can think about what makes sense to you.
Yeah, sure. I think one thing, as some of the panelists have pointed out, is the ease of doing business for farmers or for FPOs. So I think equivalent of an ERP for an FPO, which builds in all these features: access to the financer, access to the warehouse receipt, just click and drop facilities, and yet competitive, that he gets the access to the best financer and the entire flow, because it's the FPO is incorporated under the Companies Act. So none of all the requirements there have to be met. So maybe one of those sort of entities or startups which can, and I think in this respect, it's good to also not only just have that regulatory space, but also maybe funding from the various government initiatives that exist. For example, today, one of the problems that FPOs face is that if you borrow from a bank or an NBFC, there's a pledge on the goods till you sell it, right? Now, you can't sell it till you remove the pledge, which means again, he has to borrow, right? So this linkage between allow him to sell the goods and allow the proceeds to go to the lender and the balance to him. Now, this, of course, somewhere it's also in the equity markets led to misuse of power of attorneys, etc. But in a closed, confined space, if it is a farmer producer organization and this bank and this brokerage, then the goods that are hypothecated are meant for delivery on a marketplace, whether it's a futures or a spot market. And so he needn't borrow twice for that amount. So maybe there are possible opportunities in this on the commercial side of things. That would be what I can think straight on top of my head.
Great, Sanjay.
So I think as Mr.
I think we have lost Sanjay. I'll come back to Sanjay once he comes back online. Let's move to Jatin. Jatin, you've obviously sort of already on to many of these ideas, but what would you put through a sandbox?
Price insurance, definitely. There's a market for it. We can do it. I've got an insurance company working with the IRDA. We'll probably roll it out this calendar year or early next year. We'll start with some horticultural crops which have massive volatility. Price insurance can be done, should be done.
Great.
And with weather index that we have with NCDX that is awaiting approval, because monsoon is the big uncertainty in April. There's massive underwriting of loans as well as insurance that around it. There is no financial instrument in India which is directly linked to the monsoon.
Wonderful. I think Sanjay is not online, so we'll sort of circle back with him maybe in the subsequent sessions. But I do want to bring this to a close because just in respecting the time of the panelists and of all the attendees who are on this session, we have already exercised our green shoe option by 15 minutes. So I'm an eternal optimist. I do think that this is an opportunity for us to really sort of the private sector to come together. Going back to Vijay's point about the culture, I do think the kind of players that are there today, and this is no discredit to the kind of players that were there earlier, it's just that, the economy evolves and, you've got now private equity players, venture capital funds who are now investing significantly in Agtech companies, the governance responsibilities. I know I've been there, taken sort of funds from investors, and I know what sort of governance responsibilities come with taking that kind of a capital. So I do think that the cultural aspects will get fixed progressively. None of this is overnight, but progressively through just professional capital coming in rather than sort of proprietary capital, which is limited and comes with its own sort of color. But as soon as professional capital comes in, I think it will start to change the dynamics of the culture quite significantly. I'm really confident about that. And I do think that the sandbox is a very powerful tool for bringing some of these ideas to action. Otherwise, they tend to be, sitting in webinars and not moving to the field. So I think from webinar to field is where the sandbox, I think, comes into play. So in the sort of in the context of in sort of as a final note, saying that the picture abhi baki hai, that we've got we've got 2 more episodes to come, and I would like to take advantage of those working with ThinkAg to flesh some of these ideas in detail. And I hope to have the ongoing support and patronage of the regulator. It's been absolutely refreshing and sort of breath of fresh air for the regulator to sit alongside these conversations and think through the evolution of these ideas. So on that note, big thank you to all of you. Really great conversations. As always, we'll never do justice to this in an hour and a half. But I do think that we've had some very powerful ideas, and we'll pick up those in the 2nd and the 3rd episode, and hopefully bring that to some kind of a logical shape and form where some of these ideas start turning into action. So thank you again, and see you soon. Stay safe.
Thanks, Samir. Indeed, very engaging conversations. And I think, yes, this is just the beginning of these discussions. We will take these forward logically. My colleague Abhijit will be reaching out to all the people who registered for today, and obviously you can spread the word in your network. We would like to crowdsource ideas of collaboration. Also, given that Mohanty sir has talked about the sandbox, we would like to see how we can bring a few very concrete ideas to see how that could be piloted. And it's really an opportunity for the Agtech players to create something at a relatively lower risk, if I may say so, for a future which could be a very, very exciting place for everybody to participate. And again, I want to thank Samir for your immense contribution of time, and to Dwara for partnering with ThinkAg on this. We look forward to having the next episode definitely within the next 1 month. And again, would urge each one of you to reach out and share your thoughts on how to build on this first one. We will definitely circulate a brief summary of what's transpired today. The presentation and the video link to the recording will be available online. So please review, and we look forward to your thoughts, and have a good evening and stay safe. Thank you, everybody.
Thank you.
Thank you.
Thank you, Samirji. Thank you. Thank you, Ramanji.
Thank you, Mohanty ji. Thank you very much.
Thank you. Thank you. Thank you very much.